Manish, afternoon. You want to jump in with a fundamental view on this market? It's tough to see what would push it up unless there's a cool off in oil, for instance, because growth-wise, more or less, the numbers are factored in. Inflation, we know it's going to come off a little bit. What else? What else could push the market higher? In fact, some would say that the valuations, once you start to factor in FY12 numbers, earnings numbers, could start to look a little lofty again and could see some downside. What are the upsides right now?
If you look at the overall valuations, then everybody knows that on a 10-year average basis, markets are trading at maybe 14-15 times, and that's not very expensive. But that's what the headline numbers on the valuation suggest. But if you look deeper and look at the broader markets, valuations of stocks have come down by 30, 40, 50%, and therein where the actual value lies. So barring 15-20 stocks, there is a lot of value in the markets, and earnings on an aggregate basis we have held out so far, and if oil stays within a range, then I think it's pure fundamentals which should drive the markets up.
But Manish, I mean, when you talk about 30-40% stock, drops in certain stocks, and a point completely valid. But within the large caps, fair enough, there could be some buying interest. Small caps, mid caps, nobody seems willing to bite right now. Still reluctant, waiting for something, or is it just that there's more value in the large caps? So let's pick on those before you get down the list and start looking at mid caps.
There is always a difference between the valuations of large caps and mid caps. As a rule of thumb, it should be at a 40% discount. But if you look at the discount existing in today's times, they are significantly higher than those 40% sort of valuations, and fundamentals haven't changed much. So therein where the opportunity lies, when nobody is willing to look at some of those sectors, some of those mid-cap stocks, therein you will find some hidden gems which medium to slightly longish term should have decent appreciation. So I'm referring to that point of view.
All right, point taken there. Is there reason for banking stocks to move up? Credit growth numbers have been pretty decent. Even deposit growth numbers have picked up. So some of that pressure that they were facing because of the incremental credit deposit ratios may actually come off in this quarter. Rate hikes more or less factored in. What's the fundamentals of the banking sector looking like?
Now, if you observe that the yield curve currently is inverted, which means that the 1-year paper is closer to 9.5-10%, and your 10-year paper is below 8%, 7.9%, and deposit rates in the system, even the 1-year CP paper is now easing out to somewhere close to 9.5%. So government is spending in the fourth quarter, and that is allowing deposit in the system to rise. I think as we move into fiscal 12, government spending again would accelerate, and they should augment well for the deposits in the system. So, and if we go by what experts are saying, interest rate cycle may have peaked or may be very close to peaking out, and this is all predicated on the assumption that we don't have a serious problem on the oil front. Then maybe the interest rate sensitives, and within that the banking space looks extremely good. 20-25% sort of a loan growth. Margins although would have compressed in the fourth quarter, but I think going forward margins would also tend to come back. And if the interest rate cycle moves down, then you have lesser credit losses. And valuations have corrected significantly, roughly 20-25% correction in the banking space is what you have seen. So on a fundamental basis, one of the best spaces to own in the current uncertainties that we are seeing.
And obviously to that bit of news flow. We'll pick up on that on the other side. Here out as we get into this break, views coming in from Nitin, Rakesh, also Motilal Oswal actually with his thoughts on where the market's headed.
It looks like that a lot of the news is in the price, but I think we still have a long way to go before we can say that we are out of the woods. So clearly I think the next quarter or two are going to be really difficult for the market to digest everything that's going on. Look at where the crude prices settle, how the Middle East situation gets resolved, and most importantly, whether all of this has an impact on corporate earnings or not. So I think so far earnings haven't really been changed much, maybe no more than 5% for FY12, but I think if there is a bigger impact on earnings, then I think the market could see a little more pain. Where we are positioning ourselves really is continuing to focus on pockets of growth, and wherever we have conviction that the volatility in the market gives you the opportunity to go in, I think we're definitely looking at every decline as an opportunity to build long-term portfolios. We might see a little more rotation towards the second half of this year, back towards EMs, but I think we need to wait and watch as to how the global situation settles down. But clearly, I think at this point, global equities seem to be the trade of the year. At least on some parts of the interest rate sensitives, it makes sense to kind of accumulate them, specifically the banking sector, some of the leading auto names. Again, on the other side, we don't think yet things like construction or real estate are out of the woods. So I think that's the mixed picture on the interest rate sensitives. Technology continues to be a preferred pick. As the valuations cooled off, I think it makes sense to kind of continue to build exposure in the tech sector. That's also one of the reasons why global tech seems to be really outperforming, and I think the Nasdaq 100 has really been the best performing index last year and continues to be so this year as well. So I think it's clearly a combination of some of the defensive, some of the global trends, coupled with some of the domestic contra calls right now.
Manish, before we close off, let me try and ask you for some ideas, any segments in the market that are starting to interest you. You talked about the cuts that we've seen on individual stocks. I'm not sure if you're comfortable talking about stocks, but if not that, then sectors that you think have real value.
No, I think users of commodities would be the ones that should benefit. So, if you talk about, let's say, in the converter space, it will be refining companies, oil refining companies, which should benefit. So, as it is, we are seeing that the refining spreads are very strong in the Jan to March quarter. And on top of this, the Japan thing and nuclear plants being shut down out there, and they've been running the plant now with diesel. I think diesel gasoline spread should move up. So, and valuations of the oil marketing companies, or maybe even Reliance or the standalone refineries, should be augmented at least for the next 15 to 60 days. Nuclear plants typically take 15 to 60 days to restart again. So, the whole demand from Japan, as far as the gas side is concerned, and more on the diesel side, should augment well for diesel spreads and motor spirit spreads.
All right. I've got 50 seconds, Manish. Reliance in particular, you want to give us a slightly more medium-term view? I've been hearing conflicting comments from various analysts, some questioning whether that deal is really going to be a game changer, others saying that they have to start deploying that cash and that will be the real game-changing sort of series of events. Your thought on Reliance?
Well, I think they have done a very good deal. They have got the entire investments which they have made in KG-D6 in a period of, let's say, 1 year. So $8-9 billion is what they have spent, and that is the total amount which they will be recovering, and for which they have given a 30% stake, which means 60% stake comes as free. And now with the 3 lakh square kilometer unexplored area and with the expertise of BP, obviously, option value which has been factored in by the analysts in the market seems to be on the lower side. Of course, time will tell how correct this may be. But this 3 lakh square unexplored, that is too big an option value potential. And for FY12, as far as the E&P gas production is concerned, which currently is 52 to 55 MMSCMD. I think, and DGH has said that 67 MMSCMD is possible. I think it would be difficult to build in more than 60 MMSCMD currently. Keeping both these things into perspective, I think a 10 to 15% upside from current levels is there, and that makes us bullish on the stock.
Manish, just staying with you and just getting your thoughts once again on the broader markets. What are going to be sort of market moving events right now? What are your eyes very closely focused on at the big picture level? Oil, domestic data, anything else that you're watching very closely?
Look, I think all the negative news that we might have expected, except for the fact that oil, this contagion, is hitting Saudi Arabia. We have seen everything, most of it. I think inflation would tend to temper down because of the base effect. April to November will be very high, so inflation should not be a worry. As far as the growth is concerned, 8 to 8.5% is what we are looking at, and that would be the best in the entire global system. And as far as the fiscal deficit, the benefit of doubt currently goes to the government. So I think most of the negatives are there, and the market stays in a range 18 to 18 and a half, implying that the market wants to go up. And if there is some positive news, this can take the market actually up. And on the downside, if we were to see some horrible incidents on the oil front, then you could retest those previous levels of 17.2, 17.5. But at that point in time, valuation comfort would be just too high again. So downside of 5 to 10% max, and maybe upside in any case, I'm looking at the Sensex crossing 21,000 by March 2012.
Wow, that's still a while away.